Welcome back. Well, the crypto market has remained quite steady, this despite the halving event that took place last week. Analysts had expected that event to send Bitcoin to record highs. However, it only posted slight gains, trading above $66,000. And joining me now with greater insights on these moves is the CEO and co-founder of Valor.com, Fazam Esani. Thank you so much for your time, Fazam. Before we actually get into the price action and what this means for Bitcoin and just the general crypto market, let's start off with the mechanics. What actually goes on in the blockchain during this halving event?
So it's a great question. Basically, baked into the Bitcoin protocol, every 10 minutes, there's a certain amount of Bitcoin that is a reward for the miners, who are the people and the computers that secure the network and actually add the next set of transactions into the network.
Okay.
So they're incentivized by getting a reward every 10 minutes in the blockchain protocol. Historically, that started off at 50 Bitcoin every 10 minutes. And then every 210,000 blocks on the blockchain, which equates to about every 4 years, that reward halves. So it went from 50 down to 25, down to 12.5. Recently, it was 6.25. And as of Saturday, it's gone down to 3.125. So that's the amount of Bitcoin that is up for grabs for all of these miners that are competing all around the world to secure the network and to add the net set of transactions to the blockchain.
Well, with this halving, if your reward is halved, then what happens to your revenues? Why would you still want to be a Bitcoin miner?
Yeah, so the idea initially was that as the Bitcoin protocol and the Bitcoin asset grows in popularity, initially the amount of rewards up for grabs would be much higher. But it's important to remember that the miners have two ways of getting revenue. Number one is this reward. And the second thing is the fees that people are paying in each transaction in each block. So the idea is that as the rewards come down, fees will go up as it becomes more popular to be used around the world. And if that thesis plays out, then those rewards will become much less significant. And the fees themselves of people using the network will be what drives the revenue for the miners.
Yeah, and of course, I mean, you want your profit margin also to be expanding. Is there some sort of preparation or cost efficiencies that these miners also go through in preparation for this halving event?
Absolutely. They're always trying to be as efficient as possible. Obviously, there's a lot of energy that's associated with mining, but there's a tremendous amount of technology to ensure that the mining itself is as energy efficient as possible. So they have chips called ASICs, and not to get too technical, but there's a lot of effort that they go to get that as efficient as possible. What we did see was that there was a lot of mining activity just before the halving, people trying to get those rewards before it halved. It has come back to normal now, but as you said, there hasn't been much volatility since the halving has occurred.
Yeah, well, actually, why is that? And I mean, just because there is this narrative that after a halving event, then we get into a bull run. But I mean, just even looking at, the $66,000 that, we're seeing now is actually quite good considering where we come from.
Absolutely. So us human beings are not always as patient as we should be. So if we look at history, whenever we've had these halving events, it's on average taken about 50 to 100 days for any serious price action to occur. And that's kind of the halving to kind of settle into the system. We're talking about an asset class here that is the first and only asset class whose supply is completely independent to demand. And so as we start seeing demand increase, if it was gold, for example, gold miners start producing more gold. In Bitcoin, there is no such thing. The supply is the supply. So as people start realizing, and as the market starts realizing, wow, okay, I thought there would be more up for grabs, then that will start playing into the price. That's the theory, obviously. Nobody knows. We'll see if the future is the same as history. But historically, it has taken about 50 to 100 days for that to manifest itself.
Well, it's quite interesting because I was about to ask you, because this is purely supply side action, I was going to ask you if it does anything to demand and also what the impact of that then is on the inflation picture.
Yeah, so very good question. So on the inflation picture, specifically what they call the stock to flow ratio, or how much new Bitcoin there is per the total amount of supply that's in existence.
Yeah.
Right now, with the recent halving, that's gone down to 0.9%. And to give you an indication, that's now lower than gold. Gold is about 1.6%. So we're getting into what the people call a really hard asset, where the supply is becoming less and less. And as demand goes up, the only way for the economics to work out is if demand goes up and supply goes down, then the price has to go up.
Okay.
Right? As you know, and as you mentioned, the price of Bitcoin has been very volatile. If we look at the past year, it's been up 134%. The past 6 months is up 99%. The past month is down 5%, and the last week is up 5%. So there's a lot of volatility, and I think that needs to be taken into consideration when we also look at this halving event just in isolation.
Yeah. And of course, something that has been in the news quite a lot in the last few months is the interest from institutional investors. Of course, we know that that has come online, particularly after the spot Bitcoin ETFs that were approved in the US. Is this halving event something that institutional investors have been keeping a close eye on? And can we expect more appetite from new entrants at this point?
Absolutely. I think the halving itself isn't necessarily what's driven the interest. Obviously, with the ETFs that have been approved in the United States, that's been a decade-long process to get that approved. But we're seeing a lot of institutional demand. At Valor, we have over 1,000 institutional customers, and that's growing. We're working with large financial institutions. And that theory, and that, not theory, but that trend is happening around the world. So we're seeing a lot of institutions and retail customers come in. So I think this will, when we look at the traditional financial system with troubles with inflation that are taking place as well, people will start looking at diversifying their portfolios, and I think we'll see much more demand coming into the Bitcoin space.
All right. Well, thank you so much for giving us insights on that event. Definitely something that a lot of people have been talking about, but we hadn't really gotten into the details and what it means for the crypto space. Much appreciated, Fazam. That was the CEO and co-founder of Valor.com, Fazam Esani.